panic is something that's a very strong emotion humanly, and once that takes place, it's pretty hard to undo it with the press of a button.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with your SD Weekly Metals and Markets Wrap. And back with us today is David Morgan, the silver guru from the Morgan Report. David, thank you so much for joining us today.
Well, Elijah, thanks for asking.
All right. Now, I'd first like to discuss the precious metal markets. What is your take on the last couple weeks of price action in the gold market? We can start with first, because I know last time we had you on about 3 weeks ago, you said that gold needed to break above 1,300 for gold to get back its momentum. That's what happened. It just briefly touched above 1,300, and now it's back down to 1,288 as we record on Thursday afternoon. What is your take on what's happening in the gold market?
Well, it's always dependent on two things, price and volume. The volume was weak. It made it, but barely. I did an update for the members only, said, look, let's look at this. And what we look at besides the volume is what does the COT show? What does the commitment traders indicate? And the indication from the COT is unfavorable. Sometimes it's favorable, very favorable, unfavorable, very unfavorable. And we're at the unfavorable level. So I gave my members a heads up that it's not a coin flip. It's probably 60-40. I forget exactly what I said to them, but I'm not very bullish. I think that it's more likely to go sideways to down than it is to continue a breakout above 1,300. And obviously that's what took place.
Now, how low do you think gold could go if it does go down, as you're saying?
Well, I hate to say it, but it's true. The market knows more than anybody. I doubt we would see much under the 1250 level, but I have to say, anything is possible these days, especially with the fluidity of the markets at large. I mean, the gold market's important to us for a lot of reasons, and primarily philosophically, but from a greater scheme, you're looking at, the debt markets and the equity markets and the foreign currency markets, and these markets are huge compared to what the gold market represents. So if there's something to take place in one of those markets, say in foreign exchange or the general equity market, be it U.S. based or non, or even in the debt markets, which are huge as well, then those could usurp anything that's going on in the gold market. So for an example, if you had a large panic sell-off in the equity markets, gold would probably go down as well, because most of the gold held isn't gold, it's paper gold. And that paper gold is very liquid and easily offed or sold by those that quote unquote own it. So that's something to be aware of. And I just want to caution everybody. It's very difficult to do good analytical work, either fundamentally or technically, when these algorithms are driving most of your trades. And the problem with the algorithms is already out there for everyone to see, absolutely without a doubt. And that is going back to my early part in the speaking circuit, when I used to show a clip from the $1 Trillion Bet. The $1 Trillion Bet was a PBS documentary done on long-term capital management. And the thing about long-term capital management is it worked really, really well until it didn't work. And the idea of long-term capital management is basically true, but slightly untrue. Well, David, what do you mean by that? Human behavior cannot be predicted 100% of the time. Long-term capital management predicted human behavior quite accurately for a number of years. And the more accurate it became and the more lucrative it became, the more people piled on to a good thing, can't lose, this is the only way to go kind of mentality. Until the Russian ruble debacle took place and the algorithm said this is impossible for this thing to basically renege. And that's exactly what happened. Again, because human behavior cannot be predicted 100% of the time. Well, you can predict it most of the time, but most of the time isn't all of the time. And so that's the situation we find ourselves in with these algorithms. once the algorithms get buy, it doesn't take a long duration situation to unravel quickly if there is a reason for the algorithms to start shorting or selling. And once one does, they all do, and that's a bit of a fib. I mean, not all of them, but just about. And the way that the quants write these programs are pretty much similar across the board. So you could get in a situation where, as unrealistic as the valuations are now in the equity markets on a positive basis, you could actually make a pretty strong case that it could go equally down and be as equally unrealistic in price valuations on the downside as it is on the upside. So maybe I can be a little more succinct. As overvalued as the stock market is now, it could get equally undervalued at some point in the future. And once this thing goes away, once the algorithm starts selling off, there's all kinds of circuit breakers in place. And of course, the plunge protection team or the working group on financial markets that started after the 87 crash, all that exists and probably mitigate the problem and probably come in and, lasso these things up and say, no, let's start over, or you can only trade this much or whatever. I mean, they'll do whatever they can, but panic is something that's a very strong emotion humanly. And once that takes place, it's pretty hard to undo it with the press of a button. So I said a mouthful to say this. The gold itself is only a reflection on the overall health of the economy. And it's not the economy that we see in the financial tables. It's the physical economy that exists outside your front door. And that situation continues to deteriorate if you look at the softs or the ags across the commodity sector. Look at cocoa, coffee markets, you look at cotton, you look at, the wheat market, the corn market, the meat market, and all that. And basically, food is what we need. Softs are what we need. You could argue you don't need coffee. I don't know if I could live without it. But anyway, I'm trying to be a bit humorous. So the point being that things that we need are going to continue to have price pressure because they're becoming more scarce and difficult due to weather problems and other reasons. And we're also in a situation where the valuations of these quote unquote assets are so overvalued, it's preposterous at this time. But they will continue on that as long as the algorithms see that they're getting buy signals.
Definitely. And, you've talked about the gold market, and also I wanted to discuss the silver market. Silver broke back above $17. Is silver kind of the same story as gold? You're not too bullish on it right now?
I'm not. I mean, I'd love to be, but, I'm not a perma bull. I've called every major top, and, you can check my members on that. It's still in the, protected part of the website. And I've certainly done a much better job at the top than the bottom. But I think if you had the choice of, when to buy and when to sell, you would rather know when to sell at the top than, accumulate at the bottom. Because most bottoms are long going. There's very few V bottoms, although they do occur. So, the 17 mark was like a minimum. I like confirmation, silver confirming gold on the move. So that 1300, that factors into my thinking. And also this gold silver ratio, whether or not you believe in it or not, it exists. There is a gold silver ratio. That is a number. And that number is quite high. And for me to be confirmed, or the market to confirm to me, for the market to tell me, I would have to see a better gold silver ratio. We really aren't seeing that. So that was another caution for me to say, this $1,300 level looks like it's more likely to come back off of it than continue through it.
Now, what about the mining sector? Can you give us an update on the mining sector since the last time we talked?
The mining sector is actually still holding its own pretty well, which is contra to what I just said in the last two statements about the silver and gold markets. Usually a strong underlying mining equity market portends higher metals prices. And, the metals markets, equity-wise, are doing pretty well. I don't know if it's due to the fact that this, Nova Resources is getting, so much in the limelight about, this discovery and, going up tenfold. And, it's kind of a catalyst for those that follow the mining sector. It's kind of the story du jour and maybe valid. I don't know. I haven't looked at it real hard. We did write it up in the Morgan Report. I had David Smith look into it and do a pretty good job on an overview. That could be it. Or, there's a way to value things, and you can look at a gold stock versus gold itself and see which is undervalued to what. And of course, the mining equities are extremely undervalued relative to even gold itself. So that's a value play. So that could be part of it. And also it could be the smart money that's basically been offing their stock into this never-ending up stock market that we have, and taking profits slowly and surely, and slowly buying what everyone wants and buying what no one wants. Which means, selling what's dear and buying what is shunned. So you get out of your equity positions and you move quietly into the gold market, and you get a fair amount of leverage in the mining equity. So that's probably part of it as well. But do I know? Absolutely no. All I can do is see what the market's telling me. And the market's telling me that smart money is moving into the mining equity sector.
Another topic I'd like to touch on today is there's been this story out there, and we've even reported on Silver Doctors, on the Silver Doctors podcast, that China was going to roll out a futures contract denominated in yuan and redeemable for gold. Now, upon further looking into this story, it looks like we're not actually sure that this story is true. And you recently talked about this on a podcast you did with the Daily Coin. Now, can you tell us a little bit about your findings on this?
Sure. I saw the original article like everybody and got very excited. And I did my podcast for the week on that one topic alone. Usually I cover 3, 4, 5 different topics very briefly. And then I talk about gold and silver at the end. And it's a good way to get like a 10-minute review of really important markets with an update on the gold and silver markets on a weekly basis. So when I read it, and of course, this is 2020 hindsight, and I'm sure the trolls will say, oh, David, you're full of it. But when I read the article, I really liked it. Obviously, you can get the podcast and get my feelings. I forget, but something was gnawing at me because China doesn't release any gold. All the gold that's ever mined in China stays in China. You can't, if you're gold mining in China, you can't sell it anywhere except for the government, and it's hoarded by the government. So that kind of bothered me, but not enough to not go do a huge podcast on what the implications could or would be. I guess I said would. The next week, but it was gnawing at me. So I went and investigated the story further. And what I quoted in the latest Morgan report, I quoted Kuz Jansen, who I agree with this statement, quote, in my opinion, the story is misleading. The journalist in question of the Nikkei Asian Review confirmed to me, meaning to Kuz, he had no official sources on the oil benchmark backed by gold story whatsoever at all. So such a contract is about future oil price denominated in RMB. Upon settlement, RMB or renminbi could be used to buy gold. Naturally, any currency in the world could be used to buy gold. So there's no direct tie. And then I go on to say, after quoting him further, my talk with Louis Camasano, and I probably mispronounced that, of Small Gold. He and I talked physically on the phone a couple of times. He did a couple updates. So we got more and more involved in this. And then I sent an email to some of the main people that were talking about this. One happened to be Alistair McLeod. Alistair McLeod did a show with the Daily Coin, Rory Hall, and went through it. Basically, if you listen to it carefully, you'll understand that these are two separate contracts. There is no direct relationship between oil futures and gold. It's separate. So my last comment on this was we would comment much more. This is from the Morgan Report this month. We would comment much more, but will not, as so much has already been written for our members who are only coming up to speed on this topic. Two of the best articles written on this matter are from my friend Hugo Salinas Price at plato.com.mx, which has English translations for most of his work. However, we wish to conclude this story has caught fire, and it's probably nothing more than a rumor. Be careful. So that's where I stand on it. Can you go into the futures market and trade oil for yuan? That's going to happen, yes, but you'd have to take those funds and then go into a futures contract in gold. They are totally separate. There is no direct tie whatsoever at all.
Okay, and one of the major things about this, though, about a yuan-denominated oil futures contract is the idea that it could be a threat to the petrodollar. So if that part of the story is still true, what are your thoughts on how it could impact the petrodollar?
Oh, huge. I mean, if you go back to the first podcast I did, if you go to, iTunes, I don't know how to do it. You probably can tell everybody, Elijah, but if you go to iTunes and you type in the Morgan Report and you look back I'm guessing 3 or 4 weeks ago, that whole podcast I did. I mean, I very, very straight about what it means. It means a great deal. I go through the history of the Arabs not wanting U.S. dollars and wanting the oil to be priced in gold, and what took place with Henry Kissinger. I went through the whole history of it, and even some of the people that are usually less favorable to whatever I have to say and usually have some negative commentary, some of them actually wrote favorably to that podcast. So that, I think, is a good 10 minutes of your time to listen to what the long-term implications are. It's not going to be week after next, but long-term it's huge if and only if, well, two things really. One is if there is a direct tie, that would be very, very big. And even with an indirect tie, now that the story's out there and people can really understand what it means, it doesn't mean that some of the less favorable to the petrodollar countries might not do just exactly what's been outlined, which means trade directly with yuan, take the yuan and use it to buy gold, and then stand for delivery off of an exchange outside of the domain of China. So, the idea is very powerful. The implementation really isn't that difficult. I'm sure that it probably will take place, but as far as it being a direct, it's not. And then the other part of it is, thinking ahead, is it's a possibility, although doubtful in my view, that there could be a tie direct, but I don't think China would ever release any of their gold directly like that. They would let it come off an exchange that would not impact their gold hoard.
So basically, what's the confirmed part of the story is that China is going to roll out an oil futures contract denominated in yuan. And like we're talking about, this could really impact the petrodollar. And I'm interested to get your perspective. If you're going to be able to trade oil without using the US dollar, how will that impact then just the dollar? And also, if the dollar gets impacted, will that impact precious metals?
Well, it's a two-part question, but the first part is very simple. I mean, the whole idea in that podcast I did and others have expressed is that you had to buy dollars to buy oil. And that's one of the reasons we call it a petrodollar. You couldn't buy oil unless you had dollars. And now you don't have to have dollars to buy oil. This is absolutely huge. That's very much a game changer. Now, will it affect precious metals or not? That remains to be determined. I mean, some people that sell directly for yuan might take that yuan, might enter into a gold contract. They might not. But that's true of anybody that's buying oil with dollars. I mean, you could get dollars and go into the futures market and buy gold with that. I mean, it's the same basic thing. But as far as removing yourself from needing dollars to buy oil, absolutely huge. That alone is fundamentally probably more important than this gold-backed part. The gold-backed part gets the gold bugs excited, including yours truly, because it puts a lot of pressure on gold. Again, if you go back to that first podcast that I did about this, there was very much the Saudis wanted to have a depreciating dollar off. They didn't want it. They said, look, we got a valuable commodity. It's the most valuable commodity on the planet called oil. And we don't want to take dollars for this precious commodity. We would like to have gold, basically what they said. And then what happened was Kissinger got on his airplane and flew over there. And this is a thumbnail view, but basically convinced them that, not only you're getting U.S. dollars, but these dollars could be recycled in the bond market, which really kept them sterilized, and we will protect you. You great rulers of Arabia, you will have the power of the gun behind you to carry on as the ruling elite of this area. So that's what persuaded them. And then ever since, you have to have dollars to buy it. So now this is huge. So it will take time. It's not overnight, but that's probably a much bigger story. And that's officially based. I mean, that you can find, is officially sourced. In fact, I did a podcast on that and I showed one of the MENA articles and that it was, official sources. And, whether that was made up or not, I really doubted. There was too many official sources on that story.
All right. Well, David Morgan, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, I think, I could use a little help. I mean, we're not suffering gravely, but it's been a tough market on everybody that's been, favorable to the precious metals, either physically or derivatives-wise or philosophically. And anyone that could take the podcast, I'd would appreciate it. Anyone that took the time to let their, friends, families, and others know, especially if you do, the chat room thing or anything like that. I mean, if you want to spread the word for me, I'd appreciate it. Podcast is probably the best 10 minutes if you're somewhat interested in the overall global picture and, again, summary on gold and silver every week. Other than that, I would say go to themorganreport.com and look at the blog. Maybe twice a week is enough. I don't update it that often. And the best way to get everything is just go to the morganreport.com, give us a first name and a primary email address, verify that you're real, not a robot, on the double opt-in. And every weekend we put out, what interviews I've done and, what's been written in the blog or whatever. In other words, a summary of what we're seeing for the week, and that's free for everybody.
All right. Once again, David Morgan, thank you so much for your time.
My pleasure. Thank you.